Hello and good afternoon. So welcome to another trade breakdown video. So this specific video is for SP500. So I took a long position on SP500 on Wednesday, the PM session on the PM session open. So this was a PM session entry. So you've heard me talk about it in the past. So it is the PM session runs from 1:30 to 4 p.m. 4:50 around 4:15 New York time. So I took a trade during the 1:30 open and I held it for around 24 hours because it went to the no, it didn't reach 24 hours, or maybe it did because I closed it on the next day at around 6 p.m. around there, 5 6 p.m. Yes. So let's look at that trade. And so this was the trade, but I will delete everything and just show you from scratch how I entered the trade, how I managed the trade, and how I exited the trade. So let us just start from scratch and delete everything so that you can get a clear idea of how I did it. So yes, we had these relative equal highs left behind and so forth and so forth. Yes, so this is what I had before entering the trade. And remember, all this analysis was shared as price was unfolding on my Telegram channel. So I'm not doing this. I might be doing the breakdown in hindsight, but I did not do it in. But I shared it. I shared the trade, the signal, and everything on my Telegram channel. So you should be there if you trade the SP500 and the US 100. You should be in that channel if you trade Nasdaq and SP500. I share my trades there for educational purposes only. This is not financial advice and should not be taken as so in any way possible. So let's get down to it. So going back to the 4-hour chart, you remember that so all this started from the daily chart. Let's just start there on the daily chart on the day on Tuesday. So on Tuesday, we had this down close candle which gave us a daily change in state of delivery, a very nice change in state of delivery to the downside. And if you have listened to my weekly outlook, I mentioned that I wanted to see price sweep this sell side liquidity in the form of a trend line, and then we can start to look for higher prices. So I was expecting this move to the downside, but it did not unfold in a very nice way, or if maybe efficient way according to my model. So I was not able to participate in that move. So but I was not really worried about that move, as I kept mentioning in my Telegram channel. I really just wanted to see this swept, and then I will start looking for longs to the upside. So that's exactly what I did. So comes when it come to Wednesday, I was sure price was now going to displace to the downside. Sweep this, then we will start looking to the upside. So let's go down to the 4-hour chart where I will show you more. So on the 4-hour chart, I had this imbalance marked out, and also this sell side liquidity. This low at 69.10, this low at 68.93, and then this one at 68.87. I had the same lows marked out on US 100 because I was observing both assets, and I did not know in which asset I will take the trade. So let me just clear this. Okay, so you can see I had this trend line liquidity, and then this, and then on we had this small imbalance on the 4-hour chart. So you have seen it's bigger on US 500. So those were the levels I was observing, and I had mentioned them on my weekly outlook that I dropped on Monday. I said that I wanted to see price displaced to the downside, sweep this trend line liquidity, and then we can get a resistance in quotes to the upside. So that's exactly what happened on Wednesday. We had this price run to the downside. So you can see that this is on Wednesday, 2 a.m. This is the 6 a.m. candle, and then this is the 10 a.m. 4-hour candle. So as price was pulling to the downside, all I wanted to see were these levels being swept. So the levels were swept, and you can see that on US 100 price was more bearish. So it went even lower, completely swept, filled the imbalance, the 4-hour imbalance. But on US 500, the SP500, we only tapped to the 50% of that imbalance. So that is the consequent encroachment of that imbalance. So let's go down to the 1-hour chart so that I can explain how I actually entered the trade. So remember, I'm observing both assets at the same time, so side by side. So the trend and liquidity has been swept. We have tapped into the fair value gap, and this is at 11 a.m. So at 11, something interesting started to happen. You can see that the 12 a.m. candle did not go any lower than the 11 a.m. candle on US 500. But when I came to the other asset, the 12 a.m. candle, it went lower and swept the previous hour candle. So, but it swept and then went back inside. So, but on this one, we didn't even come to the previous hour low. So let me maybe zoom it in so that you can see. So you can see that this is the 12 a.m. candle. It did not go and sweep the previous hour candle, but on uh, Nasdaq US 100, it went swept the previous hour low, which was the current daily and the current weekly low, and then it went back inside that range. So that already started telling me that we are having a sign of reversal, and we can now, plus we have already reached my weekly points of interest. So starting to see things like this is a signal that price now is ready to rally to the upside. All right. So usually I do not take any trades between the 12 p.m. The times between 12 p.m. to 1:30 p.m. because that is the noon break or the lunch session, and there are not much activities during that time. So I just stay away from the markets and come back at 1:30, which we have an opening range running from 1:30 to 2 p.m. New York time. I mentioned last time that any times that I mention in this channel, they are referring to the New York time. So you should be aware of that. So as soon as I saw that, I marked out the last down close candle on each of the assets. So on this one, I marked the last down close candle, but the fact that US 100 had already swept the previous hour low or the current daily low, and US 500 had not, I already knew that I was not going to take the trade on US 100. I was going to take the trade on US 500 because it was the one showing more bullish signs, because you can see that its lows have held. So it means that we will keep forming higher highs on this asset more than this one. So now US 100 becomes the one for reference, and then US 500 is where my focus was on. So this was my last down close candle, and you can see what the 1 p.m. candle did, the 1-hour 1 p.m. candle did. The 1 p.m. rallied to the upside and closed above that. So this changed from LDC, last down close candle, to a 1-hour change in state of delivery level. So as soon as I got that, and you remember that all my other metrics have been met, liquidity swept, imbalance, rebalance, and so forth and so forth. So, and now I already had an SMT. So let me mark the SMT. I had the SMT here, SMT, and then yes, so SMT is already a common concept among the people who listen to me on this channel. So I shouldn't really be explaining much about that. So I already have an SMT. I'm more bullish on US 500, and I want to take the trade on SP500 or US 100. So once I got the 1-hour change in state of delivery, and this is the one p.m. candle. So of course the 1:30 to 2 p.m. is within this candle. So it's okay now to start looking for entries after the 1:30 open. So the lunch session is over. Basically, that's what I'm saying. So I'll go down to the 15-minute for my usual type of entry and start looking for an entry. So let's see where 1 p.m. was. So this is 1:30, and then this is 1:45. Okay, so that was the 1 p.m. Yes, 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 perfect. So this is exactly where my initial entry was. So this is 1:45, and then this now was the 2 p.m. candle starting to open. So we opened with a retracement, and that is usually my best entry, where I wait for a retracement on the 15-minute, and then as price leaves that retracement, I take my entry on that level. So this was my 15-minute change in state of delivery. So you can see that at 2 p.m. we opened and started to retrace lower, and then at 2:15, so this is the 2:15 to 2:30 candle, price rally to the upside, forming a 15-minute change in state of delivery. So remember, all this has not unfolded, and you can check my Telegram just to confirm what I'm saying. I was calling all of this live and giving commentary on this live on my channel. So as soon as this happened, I I am now, you have seen that we have this 15-minute change instead of delivery. I talked about this a while ago that I stopped taking aggressive entries, so I usually wait for a retracement back into that level, and then now I can start buying. So my entry was there. So this was my, I did not add entries on this trade as it was pulling higher. So all my entries were on this level, 69, around 69.04, yeah, around there. So that is where I took it and put my stop loss right there. And because my weekly bias was bullish, I was targeting the whole of this week's range. So to start with, I wanted to reach say 69.90. I think I mentioned I posted 7,002 as my level for TP2, and then TP1 was around here. Take profit one was around here because we had, this is a set of relative equal highs. So that of course is an obvious draw on liquidity. Anywhere you see relative equal highs becomes an obvious draw on liquidity. So on the 5-minute, the relative equal highs were even more clearer. Okay, so yes, you can see them right here. All this was shared on my Telegram as price was unfolding. So I hope people who are in there uh, got something educative out of it, because this is not financial advice. So yes, let's go back to the 15-minute, which is where I like to do my executions and manage my trade. I do not like the lower time frames that much, so I try to limit myself to the 15-minute and if necessary the 5-minute for entries sometimes. So yes, you can see that I took the trade on based on that 15-minute retracement, and then price running out of that retracement, and then retesting that change in state level, which was at around 69.0405. So I took that trade, and then price, my stop loss was on the current daily low, just below it. I usually don't place it exactly at that. I try to give it a bit of breathing space because we might revisit that area, and for spread, also spread issues. So that was the trade. That was how I took the trade. So let's look at how I manage the trade. So most of my trades, I do not worry about holding them overnight and so forth and so forth. As long as I have not seen any 1 hour change in state of delivery, I will hold the trade even for more than 24 hours, but mostly they range between uh, 1 hour to what, to 24 hours. Yes, probably. Yes, so nothing was changing on a 1 hour level, so I was still very bullish on this trade. So this was the first hour in the trade. No, the first hour was yes, the first hour officially was 3 p.m. Then we had this 4 p.m. run. So okay, sorry about that. I should have put that in full screen mode. So we had this 1 hour. The first hour was the 3 p.m. New York time, 4 p.m. New York time. The day closed right there, and then we had the open of the next true day open of Wednesday now, because true day open of Thursday, the true day open. So it was there. You can see that on the 1 hour, I had not gotten any change in state of delivery. So I was willing to hold the trade as long as I do not have any change in state of delivery on a 1 hour chart. So maybe I should delete this first. You can see that this was the last up close candle. So no candle had closed below this. So there was no reason for me to close the trade, and so forth and so forth. So we were locked in this range for a few hours, but nothing still was changing. There was no change in bias. I was still targeting the upside, and especially TP1 for 69.42 for these relative equal highs. So let's bring back the chart. Yes, so the trade ran pretty smoothly for a few hours. I took TP1 at 69.42, took TP2 right here at 69.65, where we have relative equal highs. Then we had another set of relative equal highs right there. So I took take profit 2 right there. And then at this point I had moved, oh, I really forgot to mention that. I had moved my stop loss to this week, this 1 hour week, because as soon as we had that week and closed above it. So let's go to the 4 hour chart. This is how I moved the stop loss higher. 4 hour chart. Okay, I think my internet is, yes. So notice that on the 4 hour chart, we had this up close. So we had now had a 1 hour change in state, a 4 hour change in state. So that is enough high time frame alignment to keep me in this trade. So as soon as that happened, I moved the stop loss from that low to this other. This was the last 4 hour candle of that day. So I moved my stop loss to its low, which is also the last up close candle. So just below it, that's where I placed my stop loss. And remember, I am managing the trade. So in case anything changes in these levels, I will just close the trade manually. So this is just to protect me from anything that might happen out of nowhere. So back to the 15 minute. I took take profit 1 here 69.42, take profit 2 at 69.65. So that's already around 60 pips in profit so far on SP500. And then so my next target was 69.97 7,000, or yes, 7,000, which was the current weekly high. And that's what I wanted. That's where I wanted to take the largest position of my day. So this will only have positions. My largest position was still running, and I wanted to take it off here, and then I would leave another one running to the upside. That's what we call a runner in trading. So uh, let's go to how I closed the trade, because I have explained how I managed it and so forth and so forth. So come Thursday, we had unemployment claims at around 4:30, but as I have been mentioning, I really do not care about the data. I just need to know when it's happening. So you can see that on the 1 hour, we had this continuous, candles, just bullish candles forming on the 1 hour chart on both assets. So this is that run. You can see that we had multiple candles just spooling to the upside, to the upside, to the upside. So I really had no reason yet to close it, even though we had news at around 9:30, so 8:30. So this was around here, but you can see that even that candle itself was very bullish. So it did not affect me in any way. I did not close any trade. at that moment. But at around 9, between 9 and 9:30 is when TP2 was hit, because it was hit in the during the 9 a.m. 1 hour candle New York time. So that happened. I was still in the trade. Now remember that after taking this, I now wanted to take my next profit off at 7,000, or the current weekly high. So I moved again my stop loss higher now to break even, because I already have TP1 in the bag, TP2 in the bag, and I have to protect my profits, of course. So now my trade is running risk free, 100% risk free, and I already have money in the pocket. So something very interesting happened at 11. So you can see that we had this last up close candle at 11 a.m. on Thursday. So this is way after the news release. And then the next candle, which was the 12 a.m. candle, this is the lunch session candle. It traded to the downside and closed below the open of the previous hour candle. So that became a 1 hour change in state of delivery. So that became a 1 hour CISD, right? So soon as that happened, we had that 1 hour change in state on both assets. So remember, I'm looking at both for reference and the delivery on this. Okay, that's just another trade. Let's just finish this first. So we had this 1 hour change in state of delivery. Let me just label it as such. This is the 1 hour change in state of delivery. Okay, so that happened, and as soon as we closed below this, I closed my trade. So I closed my all my other positions. I closed them at 69.64. So that was roughly 60 handles in profits, 60 pips. We call them handles in the indices, CFDs. So yes, I closed that trade there, because once I get a 1 hour change in state of delivery, even though it may not completely uh, invalidate my setup, it starts now to ruin the whole concept of holding the setup. Plus, it could be the beginning of a reversal back to the downside completely. But I just thought it was safer to close the trade, and 1 hour is a high time frame, so I was okay with closing that trade right there. And it was also later confirmed during by the 4 hour candle. So you can see that the 4 hour candle, this was the last up close 4 hour candle, the 10 a.m. candle, and then we had this to the downside. It closed below its open, so that became a 4 hour change in state of delivery. So basically, price has shifted and now wants to look for lower prices, basically probably for rebalancing imbalances and so forth and so forth. Story for another day. So that is how I closed the trade. 60 pips in profit. I got some highs of around 80 pips in profit and so forth and so forth. But basically, that's how I took the trade. And then on Friday, yesterday, I wanted to trade. On Friday, I don't know if I should talk about this in this video, but maybe I should. So let me just hide this. On Friday, I wanted to be bearish, but I wasn't sure, because these are the moments where I say price has come to a very decisive point, because we have this candle which came to the upside, swept the previous day low and so forth, but it was not able to form a daily change in state of delivery. So as much as I wanted to continue buying to the upside, I wasn't very sure about it, but I still labeled it and sent it to the group that if price was to close above this, the Thursday's 2 p.m. 4 hour candle, I would have taken the longs if it did the same on both assets. So that was my analysis on Friday. I wanted to continue to the upside. After closing the other entries, I wanted to buy some more yesterday and maybe hold them throughout the weekend and so forth, but it did not do that. Price was more interested in going to the downside, and that can be attributed to what we are seeing in the daily chart. So let me hide the kind of price action we are seeing on the lower time frames can be attributed to what we have been seeing on the daily time frames. So on the daily time frame, we are in a range, we are in a consolidated range, which is normal of January. Probably I could say that because it's the beginning of the year. So we are having some form of accumulation before we start to move to the direction that price will move in. So you can see that from January, or maybe even from December to the 20th of December, we haven't really broken out of this range. We have this change in state right here. To the upside, price comes, then it fails to break beyond this opening new day opening gap. It uh, displaces lower, then that change in state displaces lower, and then it reaches this imbalance. It is held there for a moment. We have another change in state, we displace higher, take out this high, we are held in that end dog again, and then we have that change in state again displaced to the downside. Now I was probably thinking we get a change in state here and then displace higher, maybe take out these highs and so forth and so forth. So we are in a range, so I am trading very carefully, and that is why yesterday I was only looking at it from a, so that is the importance of having the higher time frame context within you and whenever you're trading. So that's it. I think I've mentioned everything that I wanted to, including the consolidation or the range that we are currently in on US 100 and US 500. So be very careful with that and trade carefully and ensure you have the higher time frame concept. I think for those who have watched my weekly outlook and this trade breakdown, there you have seen the importance of context, because I really mentioned how I wanted the trendline liquidity to be swept, and then maybe I can start looking for a trade to the upside. So you have seen how I've done it. So that's how I do it. And that is the importance of having a higher time frame bias, directional bias, and narrative, as well as the context. So that's it for now. Uh, See you on next week's weekly outlook, the week that will run from 19th of January to 23rd of January. I will post. So that was two trades for me this week. Gold trade on Monday, a win, and then the US 100, US 500 trade on Wednesday that I held up to Thursday. So two trades, two wins. So far so good. See you on the next weekly outlook for both Nasdaq, SP500, and gold. Thank you for tuning in.